Hey everyone, welcome back to the channel. Today we are going to understand an important concept in taxation and finance, that is GAAR. So let us understand what is it, why was it introduced, and how does it affect business and investors. So let's break it down step by step in a simple way. Okay. So first let's see what is GAAR. So let's start with the basics. So GAAR stands for General Anti-Avoidance Rules. That is, GAAR is a set of rules designed to prevent tax avoidance. Now, what is tax avoidance? Tax avoidance means uh, using legal loopholes to reduce tax liability without technically breaking the law. So it is not illegal, but it can be unethical or unfair. So that is all about GAAR. Okay, and what is the avoidance of it? What is the avoidance part of that? That is the tax avoidance. So now let us see why was GAAR introduced. So government noticed that some companies and individuals were using complex arrangements just to provide paying taxes. These arrangements had no real business purpose. They were only created to save tax. So GAAR was introduced to stop such practices. So, in simple terms, GAAR ensures that people pay their fair share of taxes. So, the core idea of GAAR means how the GAAR works, that is GAAR. So, in under GAAR, tax authorities have the power to examine transactions. So, if they find that a transaction was done mainly to avoid tax, they can ignore it or reclassify it. So that means even if something is technically legal, it can still be questioned under GAAR. So let's take an example for better understanding. Say a company sets up a fake subsidiary in another country just to get tax benefits. In reality, that subsidiary has no real business activity. Under GAAR, authorities can say this arrangement is only for tax avoidance and deny the tax benefits. So, GAAR focuses on the intent behind transactions, not just the legal structure. So let us see the some key features of tax to understand it better. So it targets tax avoidance, not tax evasion, and applies to complex or artificial transactions, and focuses on substance over form and gives power to tax authorities. So now let us understand its impact. Okay. So impact in the sense, what does the impact it creates in terms of economy, fairness, investors, and all. So uh, it promotes, first thing, the impacts, coming to impacts, it promotes fair taxation, it prevents misuse of loopholes, it increases government revenue, and it improves transparency. However, GAAR also raised some concerns, that is some challenges. So GAAR in practice is for restructuring and reorganizing business to avoid taxes, for round tripping to uh, routing money through foreign entities, and treaty shopping, for exploiting tax treaties through shell companies. And when GAAR applies, the arrangement lacks commercial substance. Main purpose is to obtain a tax benefit, uh, and abuse or misuse the tax provisions. When these three circumstances or situations occur, then only GAAR applies. And coming to um, the challenges part of it, um, coming to the challenges part of it, I think um, there are few challenges and concerns about it too. So some investors worry that it gives too much power to tax authorities and it may create uncertainty. Also, it could affect foreign investment. But so proper implementation and clarity are very important. So let's see GAAR was tax invasion. Okay. Tax evasion. So, what is tax avoidance? Let's keep it as tax avoidance versus tax evasion. So, tax avoidance is a legal but unethical. That is where the GAAR targets this. And tax evasion is illegal. That is punishable by law. So, GAAR mainly focuses on stopping avoidance, not evasion. So, in simple terms, GAAR is a rule that prevents people and companies from using tricks and loopholes to avoid paying taxes. And that's why GAAR is important for maintaining fairness in the tax system. So, if you, I think, so I have like completed everything. So tax avoidance, as I told you, versus tax evasion. Tax avoidance, as I told you, it's a legal but questionable way. Tax evasion is illegal and criminal, as we all know. So, using the legal way only, tax avoidance or GAIR will be applied. That is using legal loopholes to reduce tax liabilities, not illegal but often unethical. This is where the GAR specifically targets this behavior. And illegal and criminal is deliberately concealing income or providing false information, a criminal offense with several penalties, including fines and imprisonment. Okay, so as I told you, the impact on the taxpayers is for the greater scrutiny, all transactions face closer examination by tax authorities. For business purpose, it will be the transaction must have genuine commercial reasons. And for expert advice, professional tax guidance is now essential. And safeguards under GAAR is approving the panel review. Clear guidelines are also provided, and it is right to be heard, and threshold limits also apply. And key takeaways, as I told you earlier, are the artificial arrangements that GAAR targets contrived schemes and substance over form, that is, intent matters more than the structure. So, see the intent, and then the compliance essential, that is follow tax laws in spirit and letter. So that's it. So if you found this video helpful, don't forget to like, share and subscribe for more simple explanations, and see you in next video. Until then, thank you. Bye bye. Goodbye.